Hey warriors, I hope you're all doing well. So, as promised in the previous video, let's start with our most important lectures for your CA final upcoming May 2025 exams, the amendment lectures. Yes, we're going to start with your amendment lectures today, people. Like I already told you in the previous video, we're going to discuss about all the amendments which have been made from your November 2024 exams to your May 2025 exams for all my friends who are now attempting May 2025 and have read the previous one. Yes, before I proceed forward itself, people, let me clarify a few things for you so that you can understand this carefully. First is that this amendment video is being prepared because for November 2024 exams, you would have read something called as Finance Act 2023. Yes, but because we are now moving on to May 2025, this is now skipped and we now have Finance Act 2024 along with a new Finance Act called as Finance Act number 2 2024. By 2 acts, I think most of you would already be aware. This year was the election year and therefore there is always one interim budget and there is always one final budget. Yes, this is one thing which you need to know, and therefore we are discussing this because there are some critical amendments to be discussed from your November 24 to May 25. Second, all circulars and notifications will also be part of your curriculum, people, for your May 2025. But as per the rules of ICI, this will stop on the 6 months before your date of exam. 6 months before your date of exam, and therefore these amendments are only up to all 31st October 2024. Till 31st October 2024, whatever amendments have come in will be part of your course curriculum, and that only will be tested for your exam. If there are any amendments after 31st October, this would be more for your November 2025 exams and not for May 2025. Yes, so our discussion today is going to be very limited to the extent of all amendments which are up till 31st October 2024 for your syllabus. Yes, these are the two things which is going to happen. Third thing, like I already clarified to you people, there are some topics which have been excluded from the syllabus. Yes, and therefore those parts may not be as a part of our discussion in today. I'll give you a referencer that yes, this was there earlier and it has been scrapped off, so that you can delete it from your book in case you're using the previous one. But like I recommended last time itself, it would be a lot better if you have a new material prescribed for you right now, so that you can focus more on only the relevant things. Yes, skipping and deleting things from your previous material may be a little bit confusing. So to that extent, it will be recommended that you have a new material. So please work on that also, people. The deletions will be discussed, but not in detail. Yes, last thing which I want to go forward and tell you, I am going to be discussing all the amendments as per how it is showing in my material. Yes, it's not going to change significantly to the extent that you use in other faculties' material. Logics will remain the same, but I'll be going in the same sequence as how I've presented in my material for my better understanding. For every amendment, I will also try to give you an illustration or an example so that you can understand this a little better. But at any stage, if you feel like you did not understand this or probably need something more to be understood and explained, please drop a message on the comment box and I will try to explain that once again to you. Yes, I'm not going to be covering all the amendments in this video, people. I'll be splitting it over multiple videos so that there is enough time for you to rejuvenate and come back for a better understanding. So please bear with me for a few more weeks and you will have all the amendment lectures with you available. Yes, that is what I wanted to discuss with you before I proceed forward on the topics. Are we good to go? Yes, great. Let's start with the whole discussion on the amendment videos, people. The first thing which you need to know is all the chapters which are going to have amendments. So I'm going to start in the first sequence. The first chapter in my book will be Basics of Income Tax. Nothing is going to change in the basics except for the discussion which I just had right now with you. Yes, in the basics, you would have to understand that there is an amendment that the Finance Act 2023 is now removed and now you have Finance Act 2024 and Finance number 2 Act 2024 for your syllabus, and therefore your assessment year has now changed from 24-25 to 25-26. Yes, so all provisions right now which you'll be writing for your exams will be from assessment year 25-26, or as we call it, previous year 24-25. Yes, this is one thing which you need to critically know from your exam perspective. All questions will be happening from 24-25 previous year and 25-26 assessment year. Yes, on that note, people, if we go forward, rates of taxes will come and have a very small amendment, which is your domestic company. This is a change which happens every year, people. Last year, you would have seen it in your books as 21-22. Now this becomes 22-23. So income tax basically comes and says, when a domestic company has a previous year turnover less than 400 crores of previous year 22-23, then in that case you will be liable for a tax rate of 25%. Otherwise, you will be liable for a tax rate of 30%. Yes, that is the first amendment which you need to know. Last year it will be 21-22. Now just one more year gets added. That's the important amendment for your exams is your foreign company amendment. This year income tax has come and clarified that whatever rate of tax which you had for foreign company was 40% until last year. This has been deleted and now made 35%. So all foreign companies going forward will be paying a tax rate of 35% unless they are specifically covered under 115A. Unless they are specifically covered in 115A, the normal incomes will be taxable for 35%. So every illustration which you had right now, people, all those cases, your tax rate will shift from 40% to 35%. One amendment for the current year. My expectation, because this is a foreign company amendment, non-resident taxation, current year expectations more on foreign company questions. Yes, so please pay attention to the foreign company rates. The foreign company rate is now jumped to 35%. Yes, no changes in the surcharge, no changes in the sets, all provisions remain the same. So domestic company, foreign company surcharges, sets and all remain the same, no changes happening there. If you proceed forward, people, no other changes in your tax rates, everything else remains the same. You have the critical amendment of the current year, the most important amendment, and it is short question to be tested. The whole capital gains have been revamped. The whole capital gains will be revamped. The capital gains provisions now come and say that on the second budget, which was passed on 23rd July, all provisions until 23rd July will remain the same as your previous year. So until last year, you would have discussed this, people, that your long-term capital gains under 112A was taxable for 10%, your 112 was taxable for 20%, whereas 111A was taxable for 15%. Yes. However, starting 23rd July, the proposal by Ms. Nirmala Sitharaman is that all rates have now been modified. Long terms have come to a standard rate of 12.5% as taxable numbers, whereas 111A has now jumped to 20%. 111A now has a higher rate as compared to long-term rates. Second is that until last year, your 112A only 1 lakh was exempted for the purpose of taxation, whereas from the current year it is 1.25 lakhs. So any amount in excess of 1.25 lakhs is what is going to be taxed for your long-term capital gains under section 112A. Whether you make the sale before 23rd July or after 23rd July, it doesn't matter. Any sale which is happening in the previous year, 24-25, for the first 1.25 lakhs, you will not be taxable, and the balance will be taxable at either the rate of 10% or at the rate of 12.5%, depending on when you transfer this. Yes. Now, the one thing which ICAI has not clarified, and probably income tax has also not done, is how do you compute taxes in this scenario? Take a very hypothetical example, people. Imagine an example where I'm coming and saying there is a guy called Mr. A. Who has sold shares under section 112A, basically long-term capital gains, and has earned the following incomes. Imagine a case where I'm coming and saying he has made a sale on 1st June 2024 for a price of 3 lakh rupees. And then he has made another sale on 1st October 2024 for a price of 8 lakh rupees. Yes. Now, if you have to compute tax on this, assuming basic exemption limit, everything utilized, people, no changes there. Assuming these are the only two incomes which you have. You'll notice that your total income is 11 lakhs. Again, your income from capital gains is 11 lakhs. Now, for those who want to compute tax, people, you would realize the first asset has been transferred before 23rd July and therefore will be taxable for a rate of 10%. Whereas the second sale is happening after 23rd July and therefore will be taxable for 12.5%. Yes. Now, the big $1 million question which comes is, I need to give an exemption of 1.25 lakhs. And therefore, how do I do it? A standard thought which most of the people would have is that, yes, let's do FIFO basis. Meaning the 1,25,000 will be removed from 3 lakh first and then the balance will be taxable accordingly. Yes. Although, because it is not clarified in the exams, it is not clarified in the income tax also, a defense can be taken that you can do this in the manner which is most beneficial to the assessee. What? It should be done in the manner most beneficial to the assessee. Now, if you use your head carefully, people, your 112A before 23rd July was taxable for 10%, whereas this is taxable for 12.5. Therefore, it makes more sense for you to reduce the 1.25 lakhs from post 23rd July from post 23rd July in order to save more taxes. And therefore my belief at this point of time is that I would like to reduce the 1.25 lakhs from the post 23rd July to save the best tax. Yes, so what will I do for 23rd July case? I will say no changes in the provisions, and therefore the 3 lakh rupees will be flat taxable for 10%, giving me a tax of 30,000 rupees. Whereas the post 23rd July, I am now going to say that I am going to remove my 1,25,000 from here. I'm going to remove my 1,25,000 from here, giving me a final income of 6,75,000, which is going to be taxable at the rate of 12.5%. How much is it, people? Help me out here quickly. Yes, 6,75,000 into 12.5% is going to give you 84,375. 84,375. This is what would be the final taxes. Yes, the left side and the right side will get added together, and this is what the final taxes will be. Now again, this is purely my recommendation because nowhere any clarification is given, and therefore you are eligible to use whatever is most beneficial to you. However, let's wait for how ICAI interprets this. Yes, there can be a difference of opinion where ICAI may in the RTP come and say that the 1,25,000 should be reduced from the pre-23rd July as well. In case any such clarification is given by ICAI, I would come back and I would give you a separate video which will clarify that. Yes, as of now, for the purpose of preparations, I would say strongly believe that it should be reduced from 23rd July, post 23rd July, so that you save the most taxes. Keep that thought in mind. Yes or no? Yes or no? Yes or no? Yes? Sweet. Yes, this is your capital gains on 112A. 112 and 111A remains same, no changes there. You don't have any further discussions to happen. If the sale happens post 23rd July, then use the new rates. If the sale happens pre 23rd July, then you can use the same rates. This is what the provisions will look like. Yes, yes, sweet. Apart from this, people, no changes in your tax rates. Your tax rates remain the same. Therefore, we are proceeding forward to the next chapter. The next chapter being your special tax regime. In the current year, special tax regime has some critical amendment only on your 115 BAC. Income tax has come and clarified that from the current year, the slabs will slightly modify itself and change a few numbers in order to give you a little more benefit. For the sake of convenience, people, the tax rates of the previous year, 23-24 were as follows. You said for the first 0 to 3 lakhs, it will be 0. From 3 lakhs to 6 lakhs, it will be 5%. From 6 lakhs to 9 lakhs, it was 10%. From 9 lakhs to 12 lakhs, it was 15%. From 12 lakhs to 15 lakhs, it was 20%. And then post 15 lakhs, it was 30%. This is what it happened, people. This is what was the rates. Yes or no? Yes. From the current year, people, the rates have slightly modified itself. Income tax decided that this limit will be increased by an additional 1 lakh. This limit will be increased by an additional 1 lakh, and therefore it now became 3 lakhs to 7 lakhs. 3 lakhs to 7 lakhs. How did you increase this, Rahul? You took it out from the third slab, for the fourth slab, which means this still remains at 7 lakhs to 10 lakhs. And then this now comes down from 10 lakhs to 12 lakhs. Yes. So basically what has happened, people, 1 lakh from here has shifted to the second slab. 1 lakh from the fourth slab has shifted to the second slab. What exactly does the impact happen here? Very simple. Until the previous regime, up to first 15 lakhs, you would have paid a tax of 1,50,000. Yes, if you compute taxes for the first 15 lakhs people, you would have paid a tax of 1,50,000. Whereas with the current year amendment and a 1 lakh getting shifted from the 15% slab to the 5% slab, you save another 10%, and therefore the current year tax would change to 1,40,000. 1,40,000. This is the only change which you have, people. Slabs have been modified a little bit. You have an extra slab of getting extra 1 lakh getting into the second slab, thereby reducing your taxes by an additional 10,000 rupees. Whatever tax you had in the previous year 23-24, same computation, except that now you'll have a 10,000 savings. Why? Because the 3 lakhs is not now 3 lakhs to 6 lakhs, it is 3 lakhs to 7 lakhs. It is 3 lakh to 7 lakhs. That is the change which you have, which means here it is for the next 4 lakhs right now, and here it is for the next 2 lakhs right now. Normally you will have a consistent 3 lakh rupees, but now there is a small shift. This is your section 115 BAC. Just bear that in mind, people. Apart from that, people, no changes in 115 BAC. Everything else remains the same. One thing which you probably have to realize and may not notice it apparently is that although your basic exemption limits have changed, your rebate has not undergone a change. Your rebate has not undergone a change. If you technically notice, people, now for the first 7 lakh rupees, how will you compute tax? You will say for the first 0 to 3 lakhs, tax will be 0. From the 3 lakh to 7 lakhs, tax should be at the rate of 5%, which will actually give you a tax of 20,000 rupees. Which will give you a tax of 20,000 rupees. Now, in all ideal scenarios, income tax should have come and changed to the rebate slab also. Yes, income tax should have come and told for the first 7 lakh rupees, they should have given you a rebate of 20,000. They should have given you a rebate of 20,000. However, unfortunately, during the amendments, they forgot to make this change. They forgot to make this change, and therefore in the current year you have a mistake in the book, but ICAI is recognized that mistake. ICAI has recognized this mistake to be actual, which means in the current year ICAI recommends that even though the actual tax may come only to 20,000 rupees, you are eligible for a rebate of 25,000 completely. You are eligible for a rebate of 25,000 completely. Now, why does this help? It's very simple, people. If you have a special taxes like capital gains, winnings, any of those items except for 112A, you can actually now claim an additional 5,000 rupees in rebate. You can now claim an additional 5,000 rupees in rebate, which you ideally would have not got until the older regimes. How does this operate, people? Very simple. Take an example where I come and tell you that this year your incomes are as follows. If I tell you that you had a salary of, let's say, 3,60,000, and then you had a 112 which you sold post 23rd July, of, let's say, another 2 lakhs. Yes. Now, in all ideal scenarios, your income becomes 5,60,000. Please help me compute my taxes, people. With the amendment of the current year, the tax will look as follows. For the first salary, it is 0 to 3 lakhs, which is 0, and then 3 lakhs to 3,60,000 at the rate of 5%. So 60,000 is going to be taxed at the rate of 5%, people, which is 3,000 rupees. This is going to be your normal tax. Coming to the 112 piece, people, because 112 is being sold after 23rd July, you will be eligible for tax at the rate of 12.5%. Yes, so you can claim at the rate of 12.5%, which is now going to become 25,000. Yes, adding both the taxes together, you should have a total tax of 28,000. Now, normally, because the slabs have changed, you should have got a rebate of only 20,000, but the current year amendment does not make any modifications, and therefore you are eligible for a full rebate of 25,000. Giving you a final tax of 3,000 rupees, on which you will add an cess of 4%, which is 120, and arriving at a tax of 3,120. This is what would be happening in the default tax regime in the current year. Please pay attention to this. You are now still eligible for a rebate of 25,000 despite your slabs being modified accordingly. Clear is this? Yes. Okay, great. What other changes do you have, people? In the default tax regime, for the first time, income tax is introduced to two special increase benefits. Where normally one would come and say the default tax regime is chosen in order to let go of benefits. For the first time, income tax has realized that they have to give additional benefits in order to attract more people in default regime. What are the additional benefits, people? Income tax has decided that if you are having salary income, until last year, you could claim a standard deduction of 50,000 both under default regime and under alternate regime. So under alternate regime, you could claim a standard deduction of 50,000 rupees in salaries, and in default regime also you could claim a deduction of 50,000 under salaries. In the current year, they said if you choose to come to default, forget me removing incomes. I am actually now going to give you an additional benefit of 75,000 on the salary income. I'm going to give you a benefit of 75,000 on your salary income, which means if you go for ATR, alternate tax regime, you get 50,000, whereas you go for DTR, you get 75,000. An additional 25,000 benefit gets extended to you if you are under default tax regime. Second benefit, people, where they have come and said, if you are going to have a family pension scheme under IFOS, Family pension scheme under IFOS. For those who remember, people, the provisions are 1/3 of the family pension or rupees 15,000, whichever is lower. Whichever is low. This is what the normal provisions are. Which is what the normal provisions are. From the current year, income tax says if you choose default regime, it is no more 25,000 of deduction. You can actually claim a deduction up to 25,000. You can claim a deduction up to 25,000. You don't have to restrict it to 15,000. You can claim 25,000 under default tax regime. Last provision, people, they said if you are going for NPS contribution, those who would come and remember the fact that in NPS contribution, self contribution has been denied under default regime, whereas employer contribution is eligible both under default regime and alternate regime. The provisions come and say if an employer is contributing to NPS, 10% of the salary can be claimed as a deduction by the employer, and the same 10% of salary can be claimed as a deduction by the employee in their 80 CCD chapter 6A. In the current year, income tax is proposed that if you are going for DTR, default tax regime, you will now be eligible to claim 14% of the salary as your employer's contribution. You'll now be able to claim 14% of your salary as your employer's contribution. You don't have to restrict it to 10%. But yes, if you go for alternate regime, it still remains at 10%. You will have to work with the 10% under alternate tax regime. Whereas if you go for default tax regime, you can choose 14% of your salaries. Is this clear? Yes. 3 amendments, critical amendments, people, for your default tax regime. Amendment number 1, standard deduction gets increased from 50,000 to 75,000 under default tax regime. Family pension deduction gets increased from 15,000 to 25,000 under default tax regime. And employer's contribution to NPS gets eligibility of 14% of salary under default tax regime. Please be very mindful that these amendments are only under default tax regime. The rules under ATR remain the same. Alternate tax regime will have the same old laws, whereas 50,000, 15,000 and 10% of salary. These extra amendments are only for DTR, default tax regime. Yes. Great. Let's move on forward, people. What other amendments do we have? We don't have any other amendments when it comes to your default tax regime, and therefore we are skipping it forward. No amendments in unexplained income, so therefore I'm skipping this forward. Agricultural income also has no amendments, and therefore no changes here. Starts your computation of total income, people. The first important amendment for your current year is me overriding the Supreme Court decision in the case of Chennai Properties. Yes, Supreme Court decision in the case of Chennai Properties. Until last year, people, for those who have attempted November 2024, you had a case law which was given in your PGBP chapter. Which was a case law from Chennai Properties. Or a case law of Royal Corporation. Let me spend some time on this, people. What is the provisions? What was the case law coming and saying? The case law came and said that if there is a company called RC, whose business itself is to let out, then the Supreme Court had held that whatever income the person earns will only be taxable under PGBP and not under HP. So if you can prove, as per your memorandum of association or articles of association, that your predominant business is to let out properties, I will not tax you under HP, but rather I will tax you under PGBP. That is what the court decision came and said. In the current year, to ensure that this provision has been overridden, this case law has been overridden, amendment has been brought in the current year where they came and clarified that even if Royal Corporation, Chennai Properties, or any assessee for that matter, is letting out residential house properties, then they cannot be taxed under PGBP, they will be taxed under HP. Even if you prove that this is your main business. I would not give you any exemptions. You will be taxed under HP even if it is your main business. In simple words, people, if I have to come and tell you that I have a HP, what do I have? I have a HP, I would first come and ask, is it your business or is it not your business? Or is it not your business? If you come and tell me it is not my business, then I really don't care. I really don't care. You are going under income from house property only. You are going under income from house property only. Whereas if you tell me that this is your business, then I will have to ask you a second question. Tell me, is the property you are letting out a residential house property or is it a commercial house property? Or is it a commercial house property? If you tell me it's a residential house property, the current year amendment will say this will also become taxable under the head HP. This will also become taxable under the head HP, even if you can tell me that this is your main business. Even if it is your main business. Whereas if it is your commercial HP, then there is no change. This still remains under PGBP. This still remains under PGBP, which means from the current year, people, there is only one item which can be stood under PGBP, is those commercial house properties which you are giving for business purposes. Yes. Now again, while you may come and ask if it's a commercial, then it's a house property. That is a conversation you should have had in inter-syllabus itself. Any building with the land attached thereto will be called as a house. Will be called as a house. It only depends on whether you call it residential or commercial based on your service line. Based on your service line, that is the only difference. So therefore, commercial buildings are also called as house property only. There is no difference there. Yes. So the fact of the matter here is that if it is not your business, then it is going under HP. But if it is your business, if it's a residential house property, that is also going under HP. But if it is a commercial property, then that alone remains as PGBP. Everything else remains as it is. Yes, a very weird case amendment, people, but that is what it is. It is what it is. It says it is clarified that the income from letting out of house properties which are residential in nature, shall only be taxable under the head income from house properties and not under PGBP. Please be mindful about this. Yes, if at all ICAI wants to ask you a question, they may ask you a question of a total income. And that compulsory question, they may come and say that there is a person who is letting out residential house properties as a part of his main business, and they may give you a number. Yes, do not make the mistake of keeping it under PGBP. Please make sure that you travel it back to HP and claim 30% standard deduction on it. 30% standard deduction on it. Yes, please be mindful about this amendment. Amendment number 2. If I have to proceed quickly forward and tell you, it is under your 40A. It is under your 40A, which talks about an NPS, the provision which we just discussed, people, when we came to default tax regime. Yes, for those who understand this carefully, people, the provisions have come and clarified that now an assessee can claim employer's contribution up to 14% on default tax regime, and therefore the amendment has been introduced in the PGBP chapter as well. The PGBP chapter now comes and clarifies that when an employer is contributing NPS money, he shall be eligible for a deduction of 14% of the employee's salary. Until last year, you would have seen this number as 10%. You will ignore this number right now and take it as 14% under PGBP chapter. The one thing which I want to clarify to you people is that this 14% number is a standard number. They are not checking whether the employee is opting for DTR or ATR. They are not checking whether the employee is opting for DTR or ATR. Income tax says it doesn't matter what the employee chooses. Employer is eligible for 14%. Yes, which means if they have to ask you a question, a beautiful question can be made in exam where ICAI may give you a question which says an employer is proposing to contribute 13% of the salary. Whereas employee has confirmed saying he only wants to opt for alternate tax regime. It does not matter. Even if the employee chooses to go for alternate tax regime, income tax permits you to contribute up to 14% of salary. What would happen in that case? When an employee files his return, employee would tax the whole 13% and would claim only 10%. Therefore, the 3% will become taxable in his hands. But no changes will happen in the hands of employer. Employer contribution remains the same. Yes, why is this happening, people? It's very simple. Income tax some time back had already given a clarification saying even though an employee may inform employer about his regime, employee has the permission to change the regime during his return filings. And therefore it was extremely difficult for employer to decide today as to what contribution should he be making, and therefore they decided that let's keep it standard 14%. Let employee take the taxable component into his consideration if at all he's doing DTR, if he's doing ATR. If he's in DTR, then there is no problem. What you contribute is what you get as deduction. Yes. So please be mindful about this amendment, people. This could be a part of your compulsory question. Yes. What is the amendment once again, people? Quickly looking at the amendment comes and says when an employer is contributing to NPS for the employee, he can contribute up to 14% of the salary of the employee regardless of what regime he chooses. Yes, these are the amendments which are there in PGBP chapter for you to go through. Let me check if there is any other amendments in PGBP. My memory serves there are none, but yeah, quick check. MSME and all is last year's amendment already. You have no amendments in your 44AA, 44AB, your 44AD and ADA amendments already came in last year. You don't have any amendments in 44AE as well. And that sums up your PGBP chapter. Yes, this is what is your amendments in PGBP. No amendments in your ICDS, people. ICDS remains the same. No changes have been made there. ICDS does not have to be modified. Yes. Perfect. Yes, with this, people, I would like to stop today's session. 30 minutes is fairly sufficient for you to go through the first piece of amendments. Please focus on these amendments. We will come back in the next class and discuss the critical amendments which are pertaining to capital gains. Since the whole chapter has substantially got modified, I don't want to be doing it in this video itself. Let's take a breather and we'll come back and do it properly in the upcoming videos. So I'm stopping the video right now, people. I hope you like the session. If you have, then please recommend this to your other friends as well so that everyone can benefit together. And yes, like I told you earlier, if you have any doubts on this, please feel free to reach out to me and we can discuss it together. Yes, that is all for today, people. I'm signing off right now. We will meet soon in the upcoming videos. Take care. Bye bye.